In this video, we'll be taking a few charts to get you prepared for the week ahead. If you love the content, please like, subscribe, and leave your thoughts in the comment section down below. And if you haven't checked out our, chart pattern playbook, which is going to help you a lot, get that book right now. It's totally free. Use the link in the description below. So we'll start with the go chart on the 2 hours time frame, and what you can see is a symmetrical triangle, right? We have price creating lower highs, higher lows after this massive bullish rally from gold. That got stopped after we had this double top. So double tops, symmetrical triangle, everything was discussed in the chart pattern playbook. Exactly how I trade them, how I pick my positions, what I watch out for. It's going to help you a lot if you get that book. Link in the description below. It's free. So what I'm watching out for right now is a move to the upside, to the upper bounds of the symmetrical triangle, right? So I'm watching out for a move like this. So something like this up into this resistance level with a possible consolidation and a bullish move to the upside. Mind you, if you know how to trade symmetrical triangle, or if you've read that book, you will notice that symmetrical triangle aren't a confirmed way to go either long or go short, right? We only go long when price breaks either to the upside or the downside. That's when we get a definitive direction as to where the market is headed. But with gold, it's quite different because there are lots of fundamentals, surrounding the gold price at the moment, as well as the DXY. So DXY, we'll talk about that later in this video. So we seem to have created some sort of a base over here at the bottom of the symmetrical triangle, but this doesn't mean we still can't go down. So there's a good chance we can still go down, but I don't think that's going to happen. Meanwhile, I'm going to show you my bullish and bearish case scenario in a few minutes. So to go long, mind you, I'm already long on this trade, so I got in on Friday around these lows, right? I'll show you why. But if you're not in right now, so going out to the 1 hour time frame, for example, you can see we are kind of retesting this trend line, right? After this consolidation with this breakout. So if you aren't in right now, I would say you could go in at the moment if you want to go aggressive, right? So you could go in at the moment and your stop loss will be placed around these lows, right? For me, if you go in right now aggressively, stop loss will be placed around these lows because this low is going to be where we get invalidated, right? And take profit target, first one will be around these highs, right? So this place will be my first take profit target because we had a resistance here, we had this resistance turned to support over here. So a rejection, a bounce, so good area of value to take profit first. So first take profit level, and second one could be whenever we hit or tap into this resistance level of the symmetrical triangle. So that is my first bullish case scenario to go long aggressively. Now for a more conservative approach, if you want to be more patient, I would say wait for a bounce, right? A small consolidation, and then a breakout to the upside. So this would be a better way to go long if you're still skeptical about going long here, because there's a good chance we go all the way down, right? So this is just my opinion, and if you do that, your entry will be placed like this. So this will give you some sort of a pattern like this. Then you can go long after the breakout, right? So there's no guarantee that this happens. So this is just expectations for those who want to go conservatively. But this time, your stop loss can be placed underneath the lows that leads to that breakout after the consolidation. So this gives you a tighter risk to reward ratio, right? Because you know, okay, by the time price comes down here, you want to get out of the trade, right? Because you don't want to hold your trade all the way from these highs or these price levels to these lows, right? But for me as a trader, that's something I could do because of my account size and my risk management, right? But everyone has different risk management profile. So if you are waiting for a conservative approach like this, best place to put your stop loss will be underneath the consolidation list or the breakout, just in case the pattern gets invalidated, right? So that's my second bullish case scenario. And take profit target remains the same. First one here, second one at the highs of the symmetrical triangle. So something else to watch out for is to clean up the charts. And how do you clean up the charts, right? So the reason why the way to clean up the chart is to use the line chart instead of the candlestick chart. So the line chart helps us take out most of the noise in the markets. So you can see those massive consolidation price moving up and down has kind of be cleared out with the line chart, and you can see that we've had a clean breakout, and right now we seem to be having some sort of a retest, right? So if we do get a reversal, consolidation and breakout, that could be your confirmation to go long conservatively. But for me, I'm already in on this trade and my stop loss is placed on this lows, so I'm going to see how it evolves, right? So the reason why I went long over here is this. So if you pull up the moving average, I always use the moving average on the 4 hours time frame in this case, so 200 EMA and 200 SMA, you can see that the moving average has been acting as a solid area of support. So I went long immediately. We got close to this moving average. My stop loss placed immediately underneath the moving average. So the reason why I do this is because it gives me a tighter risk to reward ratio. So now imagine, you know, having an entry around these price levels. So my stop loss would be approximately just 200 to 300 pips, and take profit target could be as high as 1000 pips, right? Which is exactly what I'm watching out for. So I'm going to be taking out my position 1000 pips, see how price reacts to this area of resistance of the symmetrical triangle, then watch out for a breakout to go higher, or possibly I may trade a bounce, a rejection for quick profits. But this is how and why I took that long over here, because the moving average on 4 hours time frame is acting as a very good area of support, which I've always talked about if you've been following our videos, right? So mind you, something to pay attention to: if you intend to go short, let's say for example we see price breaking down below, then my stop loss is going to be nailed. I wouldn't just jump into a short position, right? So the reason is because if you go to the 6 hours time frame, the moving average is creeping all the way slowly into those price levels, right, where these symmetrical triangles could eventually become a breakout. So for me to go short, I want to see price breaking through the symmetrical triangle into this area of value, possibly wait for a consolidation and another breakout from the moving average on the 6 hours time frame. Then this would give me a better confirmation to go short, right? So for me, when the symmetrical triangle breaks out below, I am not going to jump into, you know, a short position, because we could easily get a quick bounce from the moving average on the 6 hours time frame, leading to higher price targets. But at least not until we take out the 6 hours time frame moving average, because it's so close to the breakout, then I'm going to consider going shorts on gold. But for now, I remain bullish because of the reasons I explained a few minutes ago, and we're going to see how this evolves. So if you disagree with me, leave your thoughts in the comment section down below. If you agree with me, please also leave your thoughts so I can learn a thing or two from you. Mind you, everything I just explained is being taught in that playbook, and it's totally free. Do yourself a favor by getting the book right now. And moving on, we're talking about Nasdaq. So we haven't talked about Nasdaq in a while. So the reason is because price has just been crazy. So we've seen crazy volatility across, you know, major indices. So right now we seem to be trading or bouncing off of this area of resistance. So resistance potentially turning into an area of support. So what we want to see is more consolidation. So I want to see some, mind you, this is a 4 hours time frame, right? So I want to see more consolidation over here, right? More consolidation followed by a bullish move to the upside to go long. So if this happens, this could give you a potential opportunity to go long. So something like this, right? So when that breakout happens, you want to go long here, stop loss placed underneath this area of support, right? That's what you want to do, right? So this will give you an opportunity to go long with a tighter risk to reward ratio, because stop loss will be placed here, and take profit target will be as high as this price level, and next one can be as high as these highs, right? So this is my bullish case scenario for gold right now. Only for Nasdaq, so US 100 right now, right? So if you take a major price movement, this will give you a stop loss of approximately 400 pips. For me, it's decent because my trade position, trade size, but use your own risk profile, your own risk tolerance, risk management. It's up to you. Take profit target, first one approximately 1000 pips, second one approximately 2000 pips. For me, it's a decent opportunity and it makes total sense, right? For me, so risk ratio of 1 to 3, 1 to 5, decent for me. So that's it briefly for Nasdaq, for the bullish case scenario. So for the bearish case scenario, I'm going to show you real quick. So for bearish case scenario, this one would be the same thing, watching for that consolidation, but this time for a strong bearish breakout to the downside, right? So strong bearish breakout to the downside, and you could take your shot. So entry would be placed after the breakout, but the point here is waiting for a consolidation, right? Which means the market participants are all deciding where the market is going to head. So that bearish breakout can be a confirmation that the market has decided to go lower, right? So that's why I wait for these consolidations. and it gives you a clear area to place your stop loss. So if we get a good breakout there, stop loss can place above the highs that leads to the breakout, and take profit target could be as low as these lows, right? Second one could be as low as these lows, and if we do get this breakout, trust me, price is going to move really, really fast, right? But the thing is, price could reverse at any given point. So a potential price level to expect a solid bounce would be around this range, right? So this range could be a potential price level to expect a bullish bounce, right, in continuation of the bullish trend. Because if you zoom out, you will notice that this is still clearly a bullish trend, because price has been creating higher highs and higher lows. So what we're seeing right now is just temporary. The Nasdaq is definitely going to go higher, but we just have to find a low first. So if we take out this area of resistance right now, which is currently trading as a support, then this could be a very good opportunity to go short and aim for these lows for higher price movements. So that's it briefly for Nasdaq. Moving on, talking about EUR-USD. So EUR-USD, this one is, one of those controversial charts, but it depends highly and heavily on what the DXY does this week, right? So for me, last week we had a channel over here, and I thought we were going to go higher because we broke out from that channel. So I'm just going to show you real quick. So we had something like this, right? So we had something like this, and we were expecting some sort of a bullish continuation if we got a bounce from this area of value, but we didn't. We got a good breakout, which we also discussed in our last video. So the thing is, we didn't create a higher highs, right? Breaking the current market structure on a lower time frame. So this is 2 hours time frame, mind you. So right now, what I'm watching out for to go long would be a bounce from this area of value. So I'm watching out for a move into this area of value. So currently an area of support, and a reversal to the upside. So this could give us an opportunity to go long, right? So if this happens, I may go long immediately. We touch this place because it's going to give me a good or a tight stop loss. Stop loss can be placed underneath these lows, right? So underneath this price level. So just going to adjust slightly. So price could come into this price level, right? Touch here, consolidate or bounce a little, then this could give me an opportunity to go long. So I'm going to go long, right? If I feel interested, by the time it happens, I could go long after the breakout from that consolidation. My stop loss could either be placed under this bounce if I'm not willing to lose a lot from currency pair. I don't trade currency pairs a lot, just on a few occasions, right? Or I may pick these lows, right? Because this lows becomes an invalidation level if we do go below this low, because there's a good chance also we see a wick down. So there's a good chance we see a wick down giving us a double bottom, then a bounce to the upside. So that's why putting your stop loss underneath the low, which could also be a liquidity sweep for market participant, but it doesn't matter for me. It's just my preference. Invalidation zones for me are just straight to the point. If we close below that level or price goes below that level, then I'm out, right? So if this happens, then I'm likely going to go long, right? So go long here. So either of these two situations gives you a tight stop loss, because on this price level will be 25 pips stop loss, around this price level will be 38 to 40 pip SL, which is decent in my opinion, because my first take profit target is going to be around here, which will be approximately 80 pips. So that's a risk to reward ratio of 1 to 3, I guess. And second take profit target will be as high as here and over here as the price evolves. So that's my bullish case scenario for EUR-USD. And for a bearish case scenario, even if we take out this trend line, I wouldn't be going short on this because it's just not worth it in my opinion, right? So for those who intend to go short, then you could watch out for something like this, a move into this price level, same consolidation, right? But this time with a good volume bearish breakout. So this could be an opportunity to go short. For me, I wouldn't be going short, because if price takes out this trend line, there's no telling when price is going to reverse, and currency pairs are not just my thing, right? So this could be a good opportunity to go short. It gives you a very tight stop loss, because you can go short immediately after the breakout. Stop loss can be placed around these highs. Take profit target first one can be placed around these lows, and you just trail your positions as you go lower, right? Because there's no guarantees as to how lows we go, right? Except you want to aim for these lows, right? Which I don't think price is going to get, but market can be crazy sometimes, right? So that's my bearish case scenario. But mind you, if you're going to be going short around the breakout from this trend line, then you also have to understand that you potentially be going short around an area of support, right? Because this is also an area of support, even though we have just one major bounce recently from this level, right? So if you are going short, if this trend line breaks, then pay attention to this, area of support. So to make it more, or to make it a better opportunity to go short, you could wait for a breach to see if we get bounced from the area of support, consolidate like this, then followed by a breakout. Then this would be in fact this is a better way to look at the market from this point of view, because of the support we have over there. So instead of just paying attention and relying on only this trend line breakout, converge both. So when price breaks this trend line, also take out the support, following a consolidation within these levels, then that could be an opportunity to go short. That's it briefly for EUR-USD. And lastly, we're talking about the DXY. So DXY, I talked about this last week, and everything that happened across majors was as a result of what happened with the DXY. So this is the 4 hours chart, and last week we were around this area of resistance. No, I think we were around these price levels, yeah. And we had a very good retest of the moving averages on the 4 hours time frame. 200 EMA, 200 SMA acted as a very sweet support, which acted as a confluence with this trend line here. You can see two highs, so two touches, bounce, and we had the oversold level slightly, tapped into. So this created a good confluence for a bounce. So this bounce in the DXY is what led to those massive movements and the volatility we saw across, majors, right? Even gold and indices, right? And what happened here was as a result of the NFP on Thursday. I don't think a lot of traders was expecting an NFP on Thursday, but we got that. So right now, there's two things are likely going to happen. We're likely going to get more consolidation, followed by a breakout to the upside, right? Which would mean majors react as expected. For majors, GB-USD, EUR-USD, they go lower if the DXY goes higher. USD-JPY, USD-CAD, and whatnot goes higher if the DXY gets lower, right? So that's it for the DXY. So if you are trading majors, pay attention to the DXY, because it can give you insights as to how to trade those majors and their potential direction. So right now, nothing's confirmed yet until we take out this area of resistance, and there's a good chance we even fall like a rock, right? Because this is a very solid area of resistance, so there's a good chance we fall like a rock. And if this happens, expect majors to act accordingly. So that's it for this week's analysis. If you love the content, please like, subscribe, leave your thoughts in the comment section down below. If you haven't gotten our chart pattern playbook yet, please use the link in the description below to get our playbook. It's going to help you a lot. And that's it from me, guys. See you next week.